It's the courage is required in the beginning. I wish we could get the confidence up front, but the confidence only comes after you pay the price. And that's just, in my experience, that's just how it works.
Welcome to Multifamily Insights. I'm your host, John Casman, and I want to thank you for another great episode. Listen, if you are enjoying this show, make sure you hit that subscribe button so you don't miss an episode, and be sure to leave us some honest feedback with a rating and review. That helps us make this show work harder for your investing goals. Now, we've got a great show today. We have a returning guest, Mr. Devin Elder. They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmancapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmancapital.com and click on the mastermind button today. Now, Devin Elder is the founder and CEO of DJE Texas Management Group, a vertically integrated multifamily investment firm based in San Antonio, Texas. Since 2012, the firm has completed hundreds of successful investment projects, including many full-cycle multifamily investments. Now, Devin is also a pilot, a podcast host, and the owner of a real estate consulting firm, brokerage, and the DJE Foundation, a 501c3 nonprofit organization. Let's welcome to the show, Devin Elder.
John, it's a pleasure. Thank you for having me. How are you?
Absolutely, Devin. Great to get you back on the show. I'm doing well. For our listeners who aren't familiar, you've actually been on twice. I think episode 60, right? Way back, episode 60, double digits there. But then more recently, episode 226. We will link to both of those episodes in the show notes. For those folks who are not familiar with your story, why don't you take a quick minute or two and give us a little bit more background?
Yeah, absolutely. Well, thanks for having me on again. Great to connect. And it's neat to see the continuity, right? Over the years now. You guys are 500s on show episodes, and just to kind of have checked in with you over the years as we've progressed with our real estate journeys, just really neat. And there's something about that continuity that I really appreciate. So thank you. My story, for a long time, it was like coming out of corporate and building a real estate company. But now I've had the real estate company for 10 years. So like, this is what I do. I'm CEO of a real estate company. I'm not breaking out of the corporate world or wherever. So, but I kind of had a traditional path, college, corporate career, was really gung ho in the corporate career for a number of years, but I kind of got jaded after a number of years there and wanted to strike out on my own. I did what a lot of people do. You start listening to podcasts, going to seminars, got the real estate bug, bought a rental, and that was it. I was actually searching for an entrepreneurial vehicle first, reading all kind of books and everything, and trying to understand how I could become an entrepreneur. And then I found real estate, and it was like, this checks all the boxes for me. I've already been trying to study and learn a business to start. Real estate checks the boxes. So bought a rental house just to condense things, bought 10, ended up buying hundreds of houses, running into scalability issues. So decided to start buying those 100 units under one address, right? Bought a 6 unit, a 75 unit, 130 unit, 250 unit apartment complex, and just kept running. To today, we've got a little over 2.5 million square feet that we own and manage, and we've got a team of about 75 people in San Antonio, and we're doing multifamily land and industrial stuff, and that's kind of what we're up to these days.
I love it, man. You talked about, being in corporate, getting a little jaded early in the career, deciding you wanted to be more of an entrepreneur, did a lot of education, podcasts, books, events. That led you into real estate, started with single family homes, acquired 100 units or so, realized that you wanted to scale, switched over to multifamily, and here you are today as the CEO of DJE Texas Management with hundreds of millions of dollars under the portfolio, from apartments to land to other assets as well. Let's start there, right? So there's obviously been a lot of growth over the years, making that transition from single family homes and building a very robust single family portfolio to transitioning into commercial, specifically with multifamily. What were some of the challenges that you faced early on in that transition, specifically going from, single family to multifamily?
Yeah, I mean, I think it would be easier to say what challenge happened, because I think it was all of them. I mean, it was all of them. It was capital, right? Multifamily takes capital. And just for context, if you're doing a $10 million deal, you probably need $7 million net worth and 700 grand in the bank, just to oversimplify it. I didn't have that starting out, so capital was a challenge. My own personal capital and net worth, because I started my first house. I bought it, and I didn't have a ton of capital. It's kind of just bootstrapping it and fighting for every dollar in the early days, and just kind of growing it from there. But fortunately, I was able to kind of grow equity over time and start to cash out on some of these houses and see some, six-figure, kind of capital stacking up to the point where I could get into multifamily. But challenges, one, my own personal capital and balance sheet, that was a challenge that needed to be overcome. Two, raising capital. I had started out with hard money and single family, and then started private money. So that gave me the on ramp to raise capital. But the first, true kind of capital raise I did was like $1.5 million on a multifamily deal. And that was a big hurdle. But once I did it, it really opened my eyes to how the business could scale. And I had partners on that first multifamily deal that were more experienced. And so it wasn't just me going alone, but my own personal balance sheet, raising capital was a challenge. The experience factor, and then just kind of the courage, to go and buy one of these huge deals. I remember a 130 unit deal we bought a long time ago was like my first real deal multifamily. I'm the lead sponsor. And I remember standing across from it and looking at, it took me a second to like scan the whole property in one go. And I just remember thinking, how on earth did the bank ever let me buy this thing? This is insane. So just letting your brain kind of grow into that, what was a huge, growth. And I think it's been nonstop for me as an entrepreneur since day one to today. Everyday growth and being out of my comfort zone. I mean, there's just no other way to put it. So, getting out of the comfort zone, learning new things, doing bigger deals, learning new skill sets. Those are a lot of challenges. At the same time, I don't know that I'd have it any other way. I think I'm wired to just take on challenges, always learn and grow. I don't think there's any better vehicle for personal development than being an entrepreneur. And that's so it kind of works for me. Part of me not being a fit in corporate was, man, I can't sit still. I need to be out there learning and growing all the time. And being an entrepreneur provides lots of opportunity for that, right?
Devin, I love it, man, because you talked about the growth and you hit on things that were so important, right? I asked about the challenges you faced making that transition, and you listed out challenges that are very common for almost every investor looking to scale a multifamily portfolio. First and foremost, you talked about, the limited balance sheet. You didn't have a lot of personal capital, right? You had some money, but you certainly couldn't qualify for a loan on these big deals by yourself. So your personal capital was a challenge. Raising capital, right? Going out there, talking to other investors and getting them to trust and believe in you, that was a challenge starting out. The thing you talked about next was the experience. You didn't have the experience, and encourage. That's one that a lot of people aren't willing to admit or verbalize, right? But that confidence and the courage to do these deals, to put your name on that piece of paper, to submit that LOI, to submit that offer, to take that step to get your first deal, it's tough for a lot of people. And many of them self sabotage
Yes,
unknowingly, right? Because they're
absolutely.
scared. What if they accept my offer? Oh crap, what do I do now? Well, now you add up all that, right? Well, I don't feel confident in what I'm doing. I don't have the experience. I don't know if I can raise the capital. All of those issues and concerns become real. You talked about that 130 unit, the first deal where you were that lead sponsor, stepping back and asking yourself, how did the bank, believe in me and give me this loan? Talk to me about that moment a little bit more, right? Because I think that moment, that courage, it's real for a lot of people, right? When you submitted that offer, when you kind of won that bid, I'm sure there was a pit in your stomach to say, "Oh crap, I gotta do this now." Talk to me about that moment.
Right. So at that point, I had done a bunch of single family stuff. I'd done a 6 unit that I bought by myself, and just to, prove to myself I could run a multifamily deal, even if it was the smallest one. And then I'd done a 75 unit with some partners. So there's 3 partners and I was one of them. And so I definitely wasn't diving into this 130 unit, and I, paid for mentorship. I'd studied it for years. So that's kind of where I was. But to go out and buy the 130 unit, I needed one other key principal to help me with the balance sheet, get the loan. I think the loan was like $4 million, which was far and away the biggest kind of financial transaction of my life at the time. I found the deal through a broker friend out of Austin. He had the deal in San Antonio, and I went and drove it, and kind of checked the boxes for me in terms of underwriting, put in a contract, did the due diligence, all the things you do, and then split the capital raise with me and my other partner, who was basically like a silent KP, but also raised some capital for the deal. So I think our raise was like $2 million, something around there. So the process of going through that, it's pretty wild from the time of like you said, accepted LOI to closing. There's a whole lot going on, man. And this deal was no different, right? It's due diligence, trying to put budgets together. You're also trying to raise $2 million on a pretty short clock. I mean, it's kind of crazy how we raise capital for these syndications. You don't want to raise it all and wait around 6-8 months a year to find a deal. Nobody wants to do that. So the alternative is, you raise it as soon as you're under contract and the clock's ticking. And that's how we all do it. That's fine. But when you're learning this, it can be pretty wild. So I remember going through all those challenges. I remember specifically being at an event for a group that I'm in. It was a ski trip in Colorado. And had launched the OM, had done the webinar, was taking investor calls, taking investor questions. And I'm in Colorado. And I just remember, and this was like a lightning bolt hitting me. I remember skiing that day, and I'm not a great skier. I'm an okay skier. And I just remember skiing down and looking off to the side, there's a steep drop off. And for a novice skier, that's pretty scary. And I just, this voice just said, hey, look where you want to go. Look where you want to go. And you're on the mountain. If you're looking all over at what could happen, man, you could die, right? You could die on the slopes. But so looking over there's not helping anybody. You want to look exactly where you're going to go. And I remember going back to my hotel room, having those investor conversations, raising the capital for this deal, thinking about the million things that could go wrong. And I just remember that thing from the mountain of just look where you want to go. Man, there's 1,000 variables beyond my control. There's 1,000 things that could go wrong. Where do I want to go? I want to close this thing on the 15th of next month. And I'm going to just shut out all other distractions and activity that don't lead to that outcome. And I think that's just it's been a real important lesson for me and a constant daily reminder for me. I mean, I come into my office and I write my 3 main goals for my business. I erase a whiteboard and I write them fresh every morning because I still need that reminder. Look where you want to go. There's 1,000 things I could be involved in my companies that I shouldn't be. And it's this constant reminder for me to stay focused on the one thing that you're after. And so that's what got me through that. So I don't want to make it seem like that deal was easier without challenge. It just, that singular focus was what got me through and to overcome any kind of objections from all the parties, the lender, the property management company, investors. Let's just push this thing through. Because at the end of the day, that's the skill that makes it for people that want to be operators that have these portfolios. It's like you gotta freaking be the one that pushes through and gets the deal done. So that's what it was for me. Fortunately, I had been through all of similar challenges on other smaller deals and was just kind of taking the next logical step in terms of size and everything. But it was all the classic challenges for sure. And it was just a matter of just persevering, staying focused on what was number one, and that was getting the deal across the finish line. And that's what got it done. And then, like a lot of things, the courage comes after, not the courage, the confidence rather comes after. The courage is there in the beginning to push you through and act in spite of fear. And then you get on the other side of it. And then and that confidence does come. Now you go, hey, I do own this. I did get a $4 million loan for this. And then a couple of years later, hey, I did go full cycle. I did hit the mark for investors. We did pay off this loan. We did what we said we were going to do with the project. And that creates a great deal of confidence that you can, propel forward to the next step. But it's the courage is required in the beginning. I wish we could get the confidence up front, but the confidence only comes after you pay the price. And that's just, in my experience, that's just how it works.
Devin, I love what you said, but specifically, I think you gave two very powerful insights, and I want to make sure everyone caught it. The first one, when we talk about that courage and confidence, well, it comes from some of the preparation, right? You hadn't had the
Absolutely.
experience being a lead operator on a 130 unit, but you did buy a bunch of single family houses. You did buy a 6 unit. You did partner with some guys on a 30 unit. You did become a general partner on some larger syndication deals, even though you weren't the lead operator. So you can still rely on those different experiences to say, hey, you know what? If you piece these parts of the puzzle together, I've got enough experience to know what this process should look like, and that gave you kind of the confidence or the courage to continue to move forward in that process. And that insight's important because when you're looking at scaling your own business, think about those steps in the journey, right? And I didn't mention this, but you hired a mentor and went through some training as well, right? So surrounding
Oh
yourself with
yeah.
people who are playing the game at that level, taking some initial steps, getting some of those investments under your belt. So even though it's not necessarily the big, huge deal that you want to do, you're getting some wins and you're building that confidence. That's absolutely critical. The second thing you talked about was focus, being on that ski slope, focusing on where you wanted to go and locking everything else out. That's so important because I think oftentimes people get distracted by what could go wrong. Well, what if I can't raise the money? What if I get into due diligence and, it needs a new roof? What if this? What if that? What if this, right? We can't do the what ifs. Take the information you do have, move forward, have a plan, recognize that any challenge you face, another investor has already faced it. And this is why it's so important to have people on your team who've gone through these things or have some experience of your own as a LP or even as a co-GP or something like that. Because now you're going to understand how to navigate these different situations and recognize that this happens. It happens to everyone. We all face different challenges, but these things are going to come up. But that allows you to build that courage and build that confidence. And it's absolutely critical if you want to be successful and not get bogged down by some of the challenges that could arise. Let's fast forward in your journey, right? Because we talked about the first deal. You've built a massive portfolio today. I know you primarily focus on kind of your backyard in San Antonio, but give us kind of the full landscape of what your portfolio looks like today.
Yeah, absolutely. So multifamily, 2,300 doors that we own and manage, all in San Antonio, with a couple hundred in San Marcos, which is kind of like halfway to Austin. So San Antonio-ish. That was kind of our first foray outside San Antonio, but you basically call it a San Antonio portfolio. So we own and manage those, and those are anywhere from 100 units to, actually we have a mixed use at 62 units up to 400 units. So, and most of those are kind of the 1980s garden style type thing, like classic kind of multifamily syndication stuff. Number of years back, we started buying rural land, totally different thing. We're buying 100 to 500 acres of rural land and making some improvements and selling it. And we sell it cash or we keep notes. So we developed a pretty substantial note portfolio, which is a completely different business, but been really interesting. I love that business. I love uh, land notes. I mean, these are cash flowing. Um, really well, good returns and all that stuff. And then the third division is our industrial division. And so my target is to build 500,000 square feet plus or minus of flex industrial space in San Antonio. So we're well underway on that target. And these are just, they're called all kind of things, contractor garages, flex spaces, whatever, but it's 1,250 square foot box with a half bath and an office, 8x8 office, 8x8 restroom, roll up door, fan. It's about as simple as it gets from a new construction perspective. But they're metal boxes, but people love them, and the use cases are quite diverse. And so we found a lot of demand for those, and they are B2B. So the management's a little, we might have an apartment complex built in 1978 with 300 units. That's management intense, man. These things, the industrial things, are like 50 units built in 2023 that, have that are business customers with a commercial lease, and it just like a different thing to manage. So we love those. My goal is to get to build that portfolio and just kind of hang on to those long term. And we feel like that's a pretty good diversification strategy in asset classes, multifamily, land, and industrial. It's still all, San Antonio or Central Texas for the most part. We can still put our management team on it. Um, whether it's, gosh, we have HR, marketing, on-site management, the whole kind of thing, which is kind of nice because if we need something for one of our companies or projects, boom, we have marketing in house. Boom, we have, management in house. We have accounting and finance in house. So that's, there are so many challenges, but to me, it's kind of like a playground too, man. We can go out and do all kinds of deals, different types of deals. We can get creative. We can bring investors in on projects. We can not bring investors in on projects. We can do them in house. And so, that's what it looks like primarily though, is land, industrial, multifamily in our backyard.
I like the fact that you focus on your backyard because I think very often people feel the need to kind of go all over and invest. And you've been able to build a pretty robust portfolio in your backyard. That may, be a challenge for other folks, right? If you don't have the deal flow or
Of
the
course.
inventory, but nonetheless, you've been able to do that. There's two things that I want to talk about. One is so many investors are having a hard time finding deals in this current environment, right? Specifically multifamily deals. You've been able to kind of, look at different asset classes. If you were starting today, right? It's clean slate. Let's say you lost everything. You had to start all over. Maybe you don't have all the knowledge you have. Maybe you do. But if you had a clean slate, where would you start?
Yeah, I mean, my answer is very specific to me and my life so far, and that would be ranches, man. I love these ranches. I freaking love them. We go fishing on them with my sons. We go camping on them, hunting on them, and I just, real estate is a lot of different things. It's also happens to be dirt in the middle of nowhere, and I love being out there, man. So for me personally, that's what I would do is, wipe the slate clean. I got nothing. I'm starting over. It'd be find a piece of dirt and figure out a way to add some value and sell it at a profit. And then just build that business back up. It's something I could do with it's something I could build solo or with an admin, once it got a little bit bigger. So that's what I would do personally. And that's different than what would I advocate somebody else do. That
Right.
might be different on your situation. But for me, and I've thought about it before, I've got this whole machine built and I'm not changing it, but boy, that land business is pretty simple next to a lot of the other more complex stuff we do. And it's
Yeah.
fun. And I just love it. So that's what I would do. I would just start another land business where, um, I mean, if I was really starting from zero, I'd probably go get my license, which I've never had a, real estate license in my life on purpose. I wanted to be the CEO, not the individual contributor. So I'd probably go get my license, start selling dirt, and then start trying to find stuff where I could add some value and sell it for a profit and start, raising capital on it.
I like that. And Devin, you're an investor. You're also a consultant. You work with other investors who are looking to scale. If someone
Yep.
came to you, same question, right? Hey, I'm having a hard time finding multifamily deals. What do you think I should do? What's your response there?
Yeah. So it depends on how I think the answer is always what's your outcome. So, for somebody working a job, their outcome might be to leave that job. Um, I really don't advocate somebody go out and try to be that sponsor on 150 units. I think there's a four-step process that I went through and that lots of people gone through. And I advocate that for people. Step one, you got to get educated, period. That's step one. Step two, you can invest passively in somebody else's deal. That's a pretty low barrier. But you're going to get a boatload of education out of doing that. And then hopefully you're getting a nice return on your capital. Step three, partner with somebody, um, more experienced operator. That's what I did. That's what lots of people have done. And then step four, you go run your own deal. So if somebody's coming to me saying, I want to buy 150 units, it's like, well, have you done steps 1 through 3? If not, I would recommend taking a look at it. Not that you can't. If you have, let's say you've got some great experience running and exiting businesses and you've got a lot of capital, you're sharp, you know how to put together teams. Hey, yeah, maybe you can go take down that 150 unit. For the most part, what I've seen is start at step one, get educated. You can do it for free. There's tons of podcasts and books and networking events. Start there. Step two, invest passively. Step three, partner. Step four, go run your own deal. So, depending on what someone's goal is, that framework works for a lot of people. If somebody's ready to go and find a deal right now in today's market, you're just gonna have to hold your nose on the rate, I think is the bottom line. I think there's going to be some good basis play opportunities, which we've seen over the last year. We picked up a couple, feel real good about the basis. The rates are crazy, right? Compared to where they were a couple of years ago. So you've got to reconcile that somehow. Um, and as always, you just got to keep turning over stones. So, the obvious stuff, your broker relationships in this world of like 100 plus unit multifamily, your broker relationships are everything. In San Antonio, we always joke around. It's like 5 guys, that trade all the deals. I've heard in Dallas, it's like 50 listing brokers. So that's crazy to me for me to even think about trying to maintain that many relationships. In San Antonio, it's guys I've known for years now and can, go have lunch with, have coffee with. It's more my team now, kind of continuing that relationship with them. So broker relationships, as cliche of a tip as that is, and the big multifamily stuff, that's it. Just keep looking, keep trying to figure out ways to put the capital stack together. I mean, the bottom line is just if you're looking at a 7 or 8 on your rate, it's going to be tough to make that thing pencil. So can you get enough of a low enough basis that makes you feel good about the acquisition period? I think that's just the name of the game right now. We'll see what interest rates do in the future, but I think that's the current environment.
Hey, Devin, real quick, you mentioned the basis, right? And getting
Yep.
more of a basis player, getting a low enough basis. Some folks may not be familiar with kind of that terminology. Can you explain exactly what you mean there?
Yeah, sure. It's what you're buying it for, so all these terms get thrown around in multifamily and you sound like you know what you're talking about if you use fancy words for the purchase price, right? So that's a great point though. And I love how people throw around especially brokers, throw around all these terms that it's like, why couldn't you just say 1%? You got to say 100 bips, huh? Okay.
Right.
So base is just what you're in it for. So typically, if you're buying it for $10 million and you're putting in $1 million of capital improvements and 500,000 of closing costs, your all-in basis is 11 and a half. It's, what was every dollar that it took to get that deal done? And you got to think about more than your purchase price. You might feel good about your purchase price, but there's a lot of transactional costs and headwinds. You might pay a loan broker 1% of the loan amount. You're going to pay the lender probably 1% of the loan amount as well. So that's 2% or 1.5% on an $8 million loan. Okay. You're going to pay your attorney 30 or 40 grand. You're going to maybe pay yourself an acquisition fee or your company an acquisition fee for a point or 1 or 2%, something like that. So there's fees that come on the deal, but your base is just kind of what was every dollar it cost to get into this thing, and can we make some improvements, operate it for a couple of years, sell, and then you've got your sell cost considerations, right? Your loan prepayment, your broker there, your attorney there, and after your sale costs, can you recover your initial basis, every dollar it took to get into the deal, and still make money for your investors? It's kind of the game we're playing here with these multifamily deals. But my point with the basis is, can you buy something right now for 85,000 per unit that 2 years ago was selling for 115,000 per unit? Yeah, some of that's existing. The reason it's 85,000 a unit is because your rate is 8% on your loan, whereas it was 3.5% before. So it boggles my mind how much of this stuff is financial engineering and loan terms. It's the same old asset. It's the same rents.
Yeah.
It's the same location or maybe better rents. And the price is $5 million less than it was purely because of interest rates. So that's just the game we're playing. So you're not going to have both sides of the coin at the same time. Everybody wants, as a buyer, you want a low price and a great rate. Ain't happening,
Yeah.
If you have a low price, it's because your rate sucks. And so can you work something out where you feel okay getting a good price and you're going to figure out a way to deal with the rate? I think that's actually a better situation than a very high price, because that price is your starting point. You can't change it. Once you're in at that price, you've got to get out at a higher price later in order to make money at this. So, I would rather have a lower basis than a lower rate going in, because the rate, as we know, can change, or you can figure out a different structure for the capital stack, or whatever the case is. But so I think that's what's happening right now is there may be an opportunity to buy things at a lower price now than there was in the last couple of years. But sellers are hanging on to their number too. People are not just dumping these things. There's been a handful of defaults I've seen here and there due to higher interest rates, and there's certainly operational strain that a lot of people are seeing. But I'm not seeing like this massive discounting of prices. Everybody, for the most part, is saying, "Hey, um, let's hang out and see what next year
What
holds
happens?
after
Yeah.
that, and just see, and just hang out." So your deal flow and your deal flow is just constrained a ton. But for the people that need to sell right now, we bought a deal last year. These guys are 20-year owners. I didn't even want to know what they bought for it. And when I heard it, it's like, oh my goodness. But that was back in time. That was 20 years ago. So of course it was lower. And then, them selling to us in 2023 is like, hey, is it less than we could have gotten 2 years before? Yeah. Is it a boatload more than we paid for this thing 20 years ago? Absolutely. Are we ready to get out and move on? Yes. So I think there's some of those sellers, those long-term owners out there. But a lot of people are definitely hanging on to and seeing what the next year is gonna bring us.
Devin, I like the way you described how to think about the market because so many people, may be expecting some major resetting of the market, and that may or may not happen. And if you're waiting on that, you could be very disappointed. Instead, you talked about getting in at a good basis, and I'm glad you elaborated there because, when we say good basis, well, what does that mean? Well, the way you just described it is one, what's your all-in cost? Let's make sure we're taking everything, not just the purchase price, but what's your all-in cost? And then we want to make sure we understand that compared to our exit, but also what would that property have sold for just 2 years ago, a year ago, right? And if you are buying an asset that would have absolutely sold for more money, a year or 2 years ago, well, now you have a good basis, right? You have a good starting point. The challenge that people have is the interest rate. So as you were saying, hey, I'd rather go in with a good basis, even if I have a higher rate, because that rate I can date it, right? I can change the rate. I can refinance down the road if interest rates drop, or when I go to sell it, somebody else may be willing to pay more money because they're going to have a lower cost of capital. So right now is actually a great time to be buying because you can go in with a lower purchase price based on the higher interest rates. It's going to suck for you in the short term because that higher interest rate is going to mean less cash flow for you, but there could be an opportunity to create even more value for you and any of your potential partners. So really good opportunities. And I love the way you kind of just walk through that logic into thinking, understanding that, having a low basis and a low interest rate at the same time is just not likely. So if you can pick one of the two, I'd rather go in with the lower purchase price because I can ride that value of equity on the upside when rates come back down. Devin, I've got one last question for you because you do focus on a couple of different asset classes. You talked about your passion for ranches and being able to buy these properties where you can fish with your kids and just really enjoy life. How do you focus and how do you decide what to focus on as an asset, right? Do you have a specific methodology? Do you just take a look at everything that comes through your inbox? What's your approach there to drive focus?
That's a great question. It's evolved over time. I think I'm I think I'm done now. And for a lot of years, it was experimenting. It's been multifamily for a lot of years. And my process has always been get intrigued by something, spend a lot of time learning about it, like get obsessive about learning about it, then do it with my own money. And then if all those things work out, grow it a little bit. And so, in multifamily for me, it was obsess about learning about it in all these ways. Go do it with my own money. I did a 6 unit and then grow it. And that's what I've done. In land, it was, hey, I bought a ranch for our family first, just out of wanting to do it. Then, hey, can we make a business? Well, let's try it. Let's buy a $300,000 ranch and see if we can make it work. And it did. Okay, maybe do another one. Okay. All right. Now we've got a little track record on ranch stuff. Let's see if investors want to do it. Oh, they do. Okay. I think we've got a new business unit here. And we do. And then same thing with industrial. Hey, I've got somebody that's doing it. Maybe they'll show me the ropes. I'll learn it. Let's experiment with it. And then let's go down that road. So that's kind of always been my thing is if something's intriguing, obsessively learn about it, then do it with your own money. And if that works, and you want to keep doing it, then expand it. And for us, what that's meant in the past is let's see if investors want to do it. And if all those things keep lining up, let's keep doing it. And so now, though, I think with the size of the company, it's much more difficult to strategically change direction. And so we just want to keep buying land. We want to keep buying multifamily, and we want to keep building flex industrial. And, that's enough. That's
Yeah.
enough.
Well, and
Um,
Devin, the thing I like is that, because you're in different asset classes, you recognize that, there are some pros and cons to each, but also
Absolutely.
that blended investing approach that provides some diversification. I know
Yeah.
that may have also led you to create kind of that income fund, right? The DJE income fund. Just
Right.
mention a little bit about that fund and who that's available to.
Yeah, sure. I appreciate you bringing that up. I'd wanted to do a fund model for many, many years, but the way we structured our fund is it starts paying out immediately. So somebody puts 100 grand in it, the fund pays out the next month, right? And for every month forever that they're in the deal. So that and the fund just pays a flat 10%, right? So it's a good alternative for like a CD or idle cash. This is not a swing for the fences, double, triple your money type deal. This is a slow and steady cash flow play for investors, right? And then it goes into the fund, which is only stuff that we own and control. It's not going out to hard money. It's not going to other people's syndications or anything like that. I've been wanting to do that for years, but I didn't have enough deal flow. I didn't want to start a fund for multifamily and then be forced to buy a deal. Because man, it is, to go 6 months without buying a multifamily deal, that's not outside the realm of possibility whatsoever. So now that we have land, industrial, and multifamily going, and sometimes one's hot for us and sometimes it's quiet. And so I needed to have all three to be able to place capital. So now when we have the fund, we go, hey, you know what? We've got this, we've got these land deals we can put it in. We've got industrial deals we can put it in. We've got multifamily deals. We've got some smaller single family assets or things like that we can deploy the fund against to produce cash flow for the fund. And it's been, we love it. Investors love it. It just took many years to get to the point where I had enough deal flow. Because what was important to me with the fund was that it was our deals. I've done tons of partnership deals, and I'm not doing them anymore. I've had a few deals I've had to take over or whatever, and I just don't want the brain damage. I've found that as long as we own and control them, we can kind of push through the inevitable challenges that will come up on any type of real estate deal. That gets harder for me when there's other partners or I don't control the deal. So we said, you know what? It's deals we control. We've been doing this long enough to where we feel really good about deploying these funds in there and diversifying. And so when an investor gets a quarterly report, there's a pie chart I put in there of their asset allocation. It's X amount is cash, X amount is in land, X amount is in multifamily. And so it's diversified there, but it's still run by one operator. So you're not kind of just putting this fund all over the country with different operators, which is important for me because I want to be able to kind of control it all to be able to sleep at night and take on people's capital. So that's what we built. It's been good. We launched it last year. We're at $10 million in the fund now. We want to get to 25 million. And then I think that's kind of where we top it out. It's an evergreen open-ended fund. Who's it for? It's for accredited investors. So there's kind of a test there that the SEC has on income. So you got to have some income or net worth to qualify there. But outside of that, if you're an accredited investor, it's something you could probably look at. So taken us a long time to get to the point of having a deal flow to do it, but it's been great. Been really cool to have that. It's simple for us to manage and deploy, and it's simple for investors to just say, hey, here's put money in and you get a distribution starting right away. And then we have a 12-month lockout, but after 12 months, you can basically pull funds whenever you want.
I love it. Well, listen, if you want to learn more, you can go to djetexas.com, right? djetexas.com. Learn a little bit more. Devin, we are going to transition to our round of insights. Are you ready?
Let's do it.
Give me a failure or an apparent failure that sets you up for later success.
So many. There's 1,000, right? 1,000 of them. Early one, getting fired from a job that I had never worked harder at. I was like, what in the world? I mean, I am really giving it my all in this job. And then I got fired. couldn't make heads or tails of it. That lit a fire in me that is still burning, right? So huge thing that was a turning point for me to really push me over the edge of being an entrepreneur. This was years ago. Another one recently.
Oh,
yeah, go ahead.
Oh, no. Give me a digital or mobile resource you recommend for your business.
Digital mobile resource. So many there. We're on, I don't know if it's the best one, but off the top of my head, Appfolio for investor relations. Software we use makes tons of things way easier.
Give me the book you've recommended or gifted the most in the last year.
The book that I like most recently, what book am I giving out? I'm really liking Dan Sullivan. So let's go with Who Not How, or really anything Dan Sullivan's put out.
All right, give me a daily habit that helps you stay focused on your goals.
Right, daily habit, wake up early, work out.
All right, give me your number one insight for multifamily investing.
Number one insight for multifamily investing, never stop educating yourself.
Love it. Love it. Well, listen, you are in San Antonio, so we're going to lighten the mood. Give me your favorite place to grab a bite to eat. And I'm going to check on my own time and see if it matches the last place you gave us.
I love it. Pinkerton's Barbecue, downtown San Antonio, stone's throw away from my office. Gotta love it. Gotta check it out.
All right. Love it. Love it. We'll make sure we link to that in our show notes. Devin, always great talking to you. A pleasure having you on the show today. A couple big takeaways. One, you talked about, working that corporate job, working hard, getting fired, and really letting that drive you, lighting a fire under you, becoming an entrepreneur, acquiring those 100+ single family homes, transitioning into multifamily, and now developing a robust portfolio that invests in multifamily, land, a little bit of notes, as well as industrial, and then really understanding what it takes to pivot and to navigate the various landscapes, different opportunities that come. And I love the way you talked about, being focused on, what it takes to succeed, not looking to your left or to your right, but focusing on the task at hand and making sure you put that energy into the correct effort. Again, for anyone who is interested in learning more about your investments, the income fund, they can go to djetexas.com. We will make sure we link to that in our show notes. I want to thank you again for coming on the show, being a great guest, and we look forward to staying in touch.
Excellent, John. It's been my pleasure. Thank you for having me.